Okay, so I'm back on Dow Canadian here. There was a nice counter trend scalp here. Had you placed your sell limits right there, you might not get filled, but that was a trap trade. So if you're counter trend trading this thing, or just range trading it, really is all counter trend trading is, I suppose. You got in up here on this top. You're just catching these tops here. Maybe your sell limits start here and go all the way up. This is 50 pips here. It goes smashing down 50. So if you just keep trading this, you're padding your account, and then maybe you get wiped out on some of these psycho moves. But look at this thing just come up. Here was the trap. Now we have a top bottom on the 4 hours. So here was the other wonderful top bottom. So you're going with that direction. The 15-minute story this morning was earlier. This is my entry for the big run up, and then look at the another opportunity to get in. So this is this morning when I was saying, oh, I'm just going to buy this pullback here, and you got all wackadoodle back here somewhere, and then went up. But even this, see how your buy limit here on the 15 would have made you more money in 15 minutes than sitting through this whole trend nonsense. Same thing here, the big stop hunt. Here's where your orders start. And for the sellers, the sellers came in here. They kind of overshot into a little bit. Here's the retest of this triangle, and a bit back at the 100-yard line again. 132 even on the dollar CAD. So we're going to play the range game, I think, tonight in this 25 pip range here, and then I don't know, we could go for a big wick before we go up. Always be aware that it's coming. This isn't like a safe place to be if your stop's too tight, because you're really going to be upset that they kicked you out. So this morning I was talking about this accumulation phase here, and we haven't come back into that. So people are kind of eager to get on the train. They optimally come back in there, but if you do come back in there, maybe that's where they're going to sit sideways and then plunge to hell, especially if it goes sideways for too long. You know you're in that situation where something's going to happen. I think it's difficult. This is a very long, this is 2 hours. This is about an hour and a half of sideways. Now you'd be running tighter orders on that. So you could run the more liberal stops here. We have your stops are here. You've accumulated during here, and hopefully you're getting out of something inside that as it bangs around. So always have I'd say 30%, or maybe you want to Fibonacci that 38%. You know, this is Fibonacci's a trigger word for me. I just go off the rails on that one. Fibonacci. Look at the retest of this 15-minute doji here. Bam, twice. So those are two big winners, low risk. And we fall below that. Here's where the bottom becomes a top for a little bit, and the trend traders are like, see? And people you know, can see that on a 5-minute moving average. It looks wonderful until, hey, wait a minute, and then when it gets all jerky like this, it destroys anybody's optimized, smooth trend bot. Now the big contest is, can we take it up to here? And when we get to here, people are going to sell. It's going to come back to here. So it's constant. There's the marketplace here, and then there's the where you build an inventory here, you mark it up, and then you dump it. And I could say this is like an inventory build just because there's a lot of zigzags down in there. So it has a different response. This is about the time of day, I think. You know, there's not much going on this time of day. And when the market opens and you get this killer top bottom on the 15, of course you kind of have to either babysit or be there, and right at that 25 yard line, and then boosh, we revisit that, so that the top becomes a double bottom, becomes a top within about, oh, I don't know, 5 pips. So you gotta give some breathing room. And of course, if you have the buy stop bot that keeps placing buy stops on the 15-minute candles, and the smaller it gets, I would say you gotta tell that robot to trade big. So he's gonna scalp to here, he's out. Maybe he lets rest go, but see how that if you move your stops to break even, they're gonna take you out. So that's all this stuff is, anytime you do anything, it's about how much you do it. So if you put too much something, you know, if you turn up the volume too loud, you blow up the speakers. It sounded great just till the speakers blew up, kind of thing. And this session here is pretty quiet, and this would have been the obvious trade tonight, is putting your buy limit right at the end of this whole thing that has been the biggest trading window for people getting in and out of this thing. So here's your classic kickback. Let's crush everybody out of that before. And so I had buy stops here, and I got picked up, and I had to tighten. The thing is, you got to have this where you only make 3 pip thing going on. So risking maybe 3 to make 4 pips. You're risking 2 to make 4 on some of these. So you have to have a button assigned to a scalp button. And then you have your, I'm going to try to make a whole 8 pips with a 5 pip stop. And then I'm going to try to make 12 pips with a 9 pip stop. So you just keep on taking your stop up 1 pip, taking your profits up 10 pips. So when you get done with your script, it's going to look like, say this is a hard stop buy script, so it buys 10K here, and you've got soft stops connected to that. Maybe you're 1 pip apart on your stops. So you've got some master stop entry, and then you've got your soft out. So if they crush out some of this, then you're okay. Well, you lost 3K. You get stopped out of 3K, whatever. But you're in still for this whole hard entry. So you actually got in as if it was a market order, or you can do that. If you want to be a sniper, you want to sit here and stalk this level, you pull the button, and you're in the whole thing with a soft stop on a 10K. Here's your stops, and then you take profits. Maybe you're out of like 50% of the script by now, and the rest is going to go to here, and that's it. It's over. So you can build that. It's just open position at the market, 10K, and I would have it by singles. Have it by 1Ks at the market. This way you can individually manipulate the you can see the stop. If you just put I've never put a buy stop of 10K with single K stop outs, so I think that's going to work. Each ticket has its own, so you have to put in, it's going to come on the screen here as a hard stop. In fact, if the market's really plunging and the broker's slow, then your stops will come in a little bit feathered out. But that's the ideal entry. If you can imagine this plunge here on the 5-minute or 1-minute chart, if you kept pulling the buy stop trigger this whole time, and you were running this really tight stop to scalp, and it makes this much in the end. You see how that was like the ultimate fit? So that is the I guess that's the big money-making deal, is how long is the blue light special. I used to work at Kresge's and they would have a blue light special. Well, it only lasts a certain amount of time. Like, the thing with these auctions is I think there's a time limit. And especially in the morning, now they're holding it below here and they're banging up on this it's the 15-minute top becomes a bottom for this big beautiful run up into this anytime you see zigzags, you know that that's a place where people agree enough to keep swapping back and forth. And it's not tradable unless you've written orders that can buy there and just grab those little itty bits off the market. And here is the retest of that top bottom without you having to be there. I mean, you got basically 2 hours to place that order. Here's I guess a smoothed out, but you know, there's a big hole forming here. And then there was not much of a chance to get on the short trade here. So if your entries are based on baby bars, then you traded the hell out of that. Same thing here on the way down. Just those two moves you cleaned up. Now, these big bars are really about placing these hand-placed orders. And on here, you didn't get filled. So if you have buy limit sitting here hoping for that ricochet off of this area, then wow. But you're just tracking the... now here the sellers are probably going to come in. See, they just nick the top of that. Sellers are coming in. I'm going to get out of my winners here. Come back with my trailing buy limits. But you never miss out on these markets. It's always up and down. There's always a buy and a sell. Here, you can only come up here and trap these guys by just a little bit. So all your sells are sitting right on that. And you place your sells like this. Maybe you have 40K there, right? And you only get filled on 30K. Each one of those is a 10. So you can see the ratios here are better. Why wouldn't you just do this and spend your time placing orders? I don't know. I guess people are just mystified. This and if you entered here and these guys are getting in here, and maybe that is this how it is. Like there's a stop here, so there's a soft stop. Each one's got the same ratio to here. Then they're designed to make this much. Now at this point you're going to be pissed because you didn't set them to get the fuck out here after getting in here, or get out here. So if your exit was going to be this guy's entrance, so the guy is making fun of, yeah, you want to reverse here and go the other way. Now if you had to break out a fib tool and find these areas, I'm already traded it. Like I've already placed by the time you get out your fib tool, I've already placed my buy limit here. And you're done for the day. Look at this thing. Now the stop bot kills on this. This is the big, and this is all nothing but, if you look back, they just cleared out some stops, and boy oh boy. And then here comes the stop bot. He sees the small range and he doesn't care whether it's going up or down. Now that could have just as well paused and gone ripping up again. Well, why not just let the market so when you do have a small, here's where you get stopped out. If you fill either the long or the short of that, even if you put the long order only in and traded it one direction, this is the thing. Just because you're trading in the direction of trend doesn't mean you're not going to get clobbered. If you put a buy stop here and you put too tight of a stop to protect yourself, you missed out on this big move. So I think it's completely range dependent. Everything's range dependent. So here comes the pullback, and it could be a crazy pullback. And this one here, like every time I've seen this trade, and made money in this trade. Yeah, you can get overly eager about this. Is it's like a 70 pip pullback. Right? That's so many pips. So that's a lot of pips in a short period of time. It still took an hour and a half, I think. And the trend line for that breakout right there seemed pretty easy to draw. I guess you could have conservatively drawn it perfectly on these, or the internal when the pressure was really building up was based on these two tops off of this. You got a beautiful wedge. So the scalpers are going to get in here, and this is the premium trap zone. I would say anything below this double bottom. Now, if you're going to be a long-term trader, if you're going to think this thing's going to go up tomorrow, you want to get in tonight, because tomorrow it's going to be screaming around up here and doing some crazy up and down stuff. Then you'd be getting in here. But the scalp game here, when it's quiet, we could end up in this nonsense all night long again. So this would be very if you're looking for big moves, this is not going to be very satisfying, although it is a perfect rally. This is a perfect micro trend, just right there. This is not really a trend, this is like blammo. And just look how precisely they take it within about a half a pip or 1 pip of that whole range. And so maybe you're putting a buy stop here and a sell stop here, and you're like, whatever, and you made money on that trade. But you got to have like a buy limit sitting here now. Buy limit's all the way down tonight in here in case we get one of these raids, and maybe it blows that out. Oh well, hopefully you're making a bunch of money in the other stuff, because this is just so much higher probability than any lottery ticket. Who would trade a lottery ticket when you just draw a line on a chart? Okay, so go to the so we went crazy. We went up into this this was it, the 25 pip wick crush, and look where they take right to here, just almost to that. They missed that. So I put on my sells up here, because I think we are going to go up here. There's going to be a big fight, and it's going to go ripping back. And so I want to get in if it falls in this pool tonight, and then if it goes up here tomorrow. These are the orders that last all week, all day. So I'm going to let this thing bake, and then I'm going to go trade other stuff. So anything that, if you've got the right script on your fingertip, and you can buy a plunge, like you're sitting there, you know exactly what that thing's going to look like. Here I'd go, okay, 15 minutes buy, half hour buy, 1 hour buy, just walk away, right? And these are the best trades because it's all planned out, and it's got to happen within an hour. And if it happens within an hour, I don't even know what the math is on that. If this thing fills, if this market can drop from here to here 50 pips in under 1 hour, not only retrace to here but go a little bit beyond, that is the perfect fit. If your master stop was, say, here or here, or maybe at a soft stop, and you got blown out at 20% of this thing, or 38%, and you rode the rest of it to here, the thing is, for the market to drop that quickly, and even here, the market drops super quick, you're like, whoa, now here you're taking some heat, but look at the payout on that script. 2 hours, you're buying every 25 pips for 2 hours, all day. Maybe each of these has a stop. You got blown out of the last one, but the ratios are like this on each ticket. You're risking 15 to make 45. And maybe you got enough money you can put in even more of those things. One currency like this, but it's really about picking, like if you're going to trade the guppy, you're going to have to put all these things in like 15 pips apart, because they're going to, even if you're trading in micro account, they blow you up as it comes flying back into the support levels for that big raid. And this, had you put a standard lot right in here at the doji with one stop, sure. But then where are you going to get out? Are you going to get out up here and miss your target? Are you going to get out along the way? Are you going to get out the what you suspect will be a failure? This is some Fibonacci thing here. And that's always going to be the other part of it, is what you left on the table. So once you start making money, it'll be, well, geez, I really should have loaded the wagon on that. And then when you do load the wagon with the, if you haven't done the math, then, so right now if I put a buy stop in, it would have to be because I have a small bar. So I put one buy stop in. But the rest of it's going to be like this, because I have if this happens in 1 hour, it means that it's a rare event, which means there's a high probability of rare events unfolding a certain way, I think. And I don't know how you could even test that theory. I guess I don't even know. It would be about expansion of the dynamics of the market, and also it has to do with it would do no good to put a sell spike script up here, but it could just as well have sold all the way into this too. So as you're long this thing, and I guess that's what a hedge is, as you're long on this explosion out of here on the north side, imagine you got in on a stop entry strategy here, technique, and you're up on that trade, and by here you're getting out of something, but you've got sell limits spaced like this, and they're designed to just kind of get in a little bit. Same thing here, you always got this just get a little bit going the other way thing going on, so that even though it's going to cut into some of your profits, but what if you're out of you have to consider that if you wrote a script that only take 25 pips off the table clean, you're out of the whole trade. Then you kind of want to have this kind of net out there to pick up the outrageous thing. And of course, it's coming if you look on the weekly. You know that's going to be like a domino theory thing where they're going to take that up like a zipper, and it's very quick. It's not a bunch of big money came in the market. The money was already in the market. All these stops are sitting there waiting to get triggered. There aren't people sitting in front. It's not some guy with it's not Wizard of Oz. Okay, there's not a guy with a bunch of money. They just fill this thing. If I hear another guy talk about these robots and manipulating the market. So here's the pullback buy, and if they come down here tonight, the other frustrating thing is if you have orders here that last 15 minutes and you go to sleep and you wake up and they're all gone and the market clump smashed down there. That's why at nighttime you'd have to put in, say, orders 17.5 pips apart, all the way down 100 pips. Maybe there's a master stop on that one. And then the next one has your fixed ratios overlapping. So it's pretty complicated. It's like doing a painting. You'd have this order with a stop and a take profit, and none of these orders overlap. So when you get stopped out of this one, you go on a free fall till you hit the next ticket. And then a blanket of orders has a different kind of, maybe a blanket of orders with a master stop, and you've got these overlaid on top. Because depending on the conditions, if the market just comes down and fills, partial fills on your master stop thing, and you've got scalps laid in there, ideally you're going to place all your scalps in this window so you can pre-scalp the market. You don't have to sit there with your finger on the trigger like some crackhead and scalp these moves. I get that it's fun, but it's unnecessary because we all know this is where the stops are. So if we put all our scalps in here and walk away, you could just be a scalper that never trades at the market. Just right. I mean, it's all pre-programmed. It's all pre-laid. You're done. So the whole day you're putting just more orders on the edge of the markets. Just take your 20 pips and go. Maybe you got to make 20 pips, make 60, make 40, make 3 tickets going. So some guy asked me to have a trading course. Well, I guess I should build one. I went to his site or his Google page, and I stumbled across this thing that said trading course module 1, and I have all that stuff, and I thought maybe I'd heard this before, but it was some guy, and I thought, God, when I look at my videos and I think, man, I'm so disorganized, and watch this guy, I felt so inadequate when I heard him. Module 1, technical analysis, Dow theory, and he goes through this whole thing, and he got sidetracked too, talking about silver. Well, they used to make photographs out of silver. I'm like, oh, now you're making me feel bad about the good old days. And I already got lost in the whole thing about, remember silver paper, beautiful, real black and white before gray and whites? Well, then the silver market went up back in the old days, and the pictures weren't black and white anymore. They were gray and white, and I was like, kind of, what's going on here? And then, why does the old stuff look so good? But, the thing is, I would say that I would have to probably title it like he did, because otherwise people aren't going to take me seriously. So if I said free Forex trading course, I think I could do it in 3 modules. Module 1 would be place an order in the market, and I'm using Van Tharp's Dr. Van Tharp is this psychologist that traded and lost a bunch of money. A real nerdy guy that does like statistics and risk ratios. And so I asked him, well, what's the secret of trading? And he said, well, you need a low risk idea. It's in his book. I think paid $2,000 for the seminar. 3 days of psychological torture, kind of like a Scientology, but you go right to OT8 right out of the gate. And it was like, hey, so low risk idea. Now that was kind of when he said that, I was like, well, what do you mean? Like, and the nice thing about Forex is that since there's no commissions, really, other than the spread, it is a low risk. It's a killer low risk thing because you can pick your risk up front. So I would say you take a single drop in MT4, and of course, my path to success in trading is MT4, because how else can you manage, unless you can have somebody else manage your money, and this Ninja Trader and all this stuff. I don't know how people are doing it, honestly. I mean, they're sitting there and manually placing pendings and putting a stop on that one thing, and how are they able to build so many variations into that? I have never seen anything like MT4, where you literally have a sandbox. You can just build anything you want. And then I would say, so your low risk idea is that you're going to risk $5 per trade or $1 per trade. You build that script. Then you go looking for a place to put it in the market. And based on support and resistance, or price pivots, and you can just do price pivots, you would just place those orders. Now, the second module would be, okay, how to, which time frame are you going to trade? Okay, you have a low risk idea. Now it's which time frame you're going to trade. And the third module would have to be, how are you going to psychologically manage the fact that you're making money from something that doesn't fit the rest of the things you make money with? And how are you going to fit this? How are you going to fit what you do, like when you place orders and stuff? How are you going to make that so that it's fits into your lifestyle? I mean, the time to do it, plus the psychology of like, oh, I'm making money here on the side. And so it's like I guess a guilty pleasure if you're winning at it, and if you're losing at it, I suppose it's guilty pleasure or guilty adventure. And I think it's you can make tons of money, and it's just kind of odd how you're just doing mundane stuff to make that money. So I see that people, they have these grandiose systems they built and all that. And I guess this is a system in a way, but this is just what I'm trying to do is build a dual system. Like this Prius thing I saw in traffic. You're getting in on volatility, but you're also getting in on what you know is going to be a popular price later on in time. So if you had your little assistant working for you, your robot, and it's getting in on this stuff, this is the low risk idea. So this is in module 1. And then in module 2, I guess it would be maybe sell limits. But module 1 is about low risk idea. And like I said, module 3 is the disbelief that if I put a buy limit here and I can get in here in limits, and this would be a stop qualifier. Here you're short right now on stops, maybe. And here's maybe a stop. But are you willing to ride that last little bit of trend? You have to realize that in some way you're coming to the end of the party. And is it better to just wait for your buy limit grids to get filled? And so all of your, if you hit a button and throws a buy limit grid in that's worth $7 to make 14 or 7 to make 28, and it's on a particular currency pair and you put it in there, that's your low risk idea. So if always low risk trade plans, and then you just have all those sitting out there, and I don't know, I guess it's odd to think that makes money, but it does. And just kind of you're just, some of it, I say it's kind of random in a way. I mean, the volatility is determined by the market, and the market's kind of the one giving you signals, or you've designed a filter that spits out a signal when the market gets quiet. So another thing is you can just look at the screen and say, okay, I'm going to put buy stops in here, or I'm going to put in buy and sell stops in here. So plenty of money to made on the Asian breakout here, and then that's it. You go to sleep. You can bank a few bucks, go to sleep, put some buy limits in there. Low risk idea. And so yeah, low risk idea. And building trading arrays, and then managing the psychology of winning and losing, only because it's unnatural. It's just an unnatural thing to make money, a lot of money, in a short period of time. But isn't this a better trade on the 15 to get in here with a limit and just be like, pow, your targets are above that, trade over? As opposed to this, oh boy. No, but if you're running this and you're running this one, also the kickback, the sell up here for the quick launch down. So within those two things, the reversal trade and the trend trade, which is typically a breakout, doesn't have to be, because in an uptrend, this kickback is always a great place to get in. I don't know if that makes any sense, but it's probably pretty convoluted, but I don't think trading is that complicated. So we're not getting filled here too much, but another 15. Now the same script is going to look, so I'm running in front of the market, just like if now the buy stop might have got filled there. No, it didn't. So that buy stop didn't get filled. I have to wait another 15 minutes to put another buy stop in. In the meantime, I would just put buy limits down here to capture possible plunge coming. It looks like a sell on the weekly. Like, oh, it's near the top. If you go to the daily, it looks like, well, breakout, pull back. I guess it's in the process of it breaking out. But if we go for another move up here, a big run up here, and I guess, I don't know, dollar goes up, stock market goes down, possibly. I guess it's how it's supposed to roll. Of course, these things always don't mirror out perfectly. So this dollar CAD moves quite a bit.